Managing your money the right way is tricky, but it becomes even trickier in a recession. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. Managing your money is like managing a baby. If you want your baby to grow big and strong, you need to nurture it, feed it to help it grow and help guide it. Okay Andy, I need you to be big and strong like your brother Benji. Just make sure you don't kiss your dollars the way you do your babies because, well, that's gross. Nurturing your money, guiding your money, and growing your money is very important. But it becomes even more important when you're in an economic slowdown or a recession. Lucky for you, we're gonna be talking about how to manage your money the right way during a recession, so make sure you watch this video until the end because you don't wanna miss any of these key details. But before we get into that, hit that thumbs up button below because if you don't, then YouTube doesn't share our video with anybody else. Subscribe to the Minority Mindset YouTube channel, that way you don't miss our new financial education videos every single week, and hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. Managing your money comes down to three things that I call keys, and these aren't just regular keys, these are major keys. Key number one, spend less money. Key number two, earn more money. And key number three, invest like crazy. If you can master these three money keys, you will be financially successful. It's not rocket science. I mean, it's financial education. But it's a lot easier said than done. I mean, if it was easy, then the majority of Americans wouldn't be broke, with no savings, no investments, and drowning in debt. Yeah, the first thing you need to do, especially during a recession, is get your cash in order. Oh yeah, I'll keep my cash in order, keep the big bills on the outside. Not that kind of order. If you have no savings during a good economy, you are at financial risk. And if you have no savings during a recession or an economic slowdown, well, now your financial risk is 10 times bigger. I don't care if you make $50,000 a year or $500,000 a year. You need to put some extra cash aside right now. That way, if you lose your job or if your business slows down, you don't have to run over to your bank and get some emergency cash through a loan. That means you might need to hold off on some things like extra guac until you have the savings cushion built. Wait, but Jaspreet, my cousin Bunty told me that guac is good for your soul. Your cousin Bunty is right, but he's also broke. Saving your money isn't the funnest thing to do, but you need to have a savings cushion. Once you have that, now it's time to grow your money. From now on, when you hear the word recession or you hear the words economic slowdown, I want you to think of the word sale. Gucci's going on sale? No. When the majority of people hear the word sale, they think, oh, what more clothes can I buy that I can't afford? I want you to start thinking different than the majority of people and start thinking like the minority of people. When you hear the word recession, I want you to think investment sale. More millionaires are made during recessions than any other time because recessions mean opportunity for the minority of people who think different. When a recession happens, great investments go on sale, and that means you can come in and buy up these really good investments at a huge discount, which means you can build your wealth a whole lot faster than you would be able to normally. We've seen it happen time and time again with the 2008 crash, the 2001 dot-com crash, the 1990s crash, and the 1980s crash. Every single one of these times, people come in who have that minority mindset and they get to buy up investments for dirt cheap and they're able to build their wealth so much faster. History has shown us that over the long run, strong companies, the economy, and the stock market all go up. And like Warren Buffett says, never bet against America. Now, let me also give you this disclaimer. Investing has risks. You are never guaranteed to make money when you invest. You might even lose money. So do your own due diligence and don't blindly listen to a random guy on YouTube. During the 2008 crash, stocks were selling for 50 to 60% off retail price, and real estate were selling for up to 80% off retail price, depending on where you live. This creates opportunity because now you can come in and you can find good investments and you can buy up more investments with whatever cash you have. The simplest way to do this, especially if you are a newer investor, is to create a financial system. That way each and every month you're allocating a little bit of money to your investments. One way you can do that is by following our 75-15-10 plan or our 50-30-20 plan. Our 50-30-20 plan is for people who have financial responsibilities and have people relying on them financially, and our 75-15-10 plan is for people who don't. What these plans say is that for every dollar you earn, 75 cents or 50 cents is the maximum you can spend, depending on which plan you follow. 15 cents or 30 cents is the minimum you should be investing, and 10 cents or 20 cents is the minimum you should be saving. You're gonna do this for every single dollar you earn from here on out. Now, you have a plan for your money, and you're guiding your money and telling it where to go, almost like a money baby. Aww. The most accessible place for you to invest your money is the stock market. But just because it's accessible doesn't mean it's easy. And the last thing you want to do is just blindly throw your money into the market. Think about economic recessions and crashes is not every business makes it out alive. I mean, we've already seen bankruptcies in the energy space, the retail space, the travel space, and you can expect that we'll see more bankruptcies as time goes on. The last thing you want to do is just throw your money into a company thinking, man, this company is going to get rich because it's so cheap right now, and then you find out this company goes under and you just lost all your investments. That's why you want to do your own due diligence and not just blindly listen to a random guy on YouTube. Did you just say random guy on YouTube? If you don't know how to analyze a company or research a company, then you might want to consider investing in an index fund. You can think of an index fund kind of like a big group of stocks. Some of the more popular index funds are SPY, SPY, and VOO. Now, I'm not telling you what to invest in, just an example, but both of these index funds are comprised of the top 500 companies in the United States. So if you invest in those funds, you get exposure to all 500 of those companies. Now, if one of the companies in that fund goes bankrupt, you're still okay because, well, there's 499 other companies in the fund. This is probably one of the easiest ways to invest in the stock market because now you are literally just investing in the stock market, and if the stock market goes up, your investment will probably go up. The stock market comes down, your investment will probably come down too. The keys to being a successful investor are to 1, make a good investment, and 2, which is just as important, is to be patient. If you're looking for a way to get rich in 30 days, then you're following the wrong channel. And anybody who tells you otherwise and tells you that investing is a way for you to get rich quick, well, then they are trying to sell you something. I'm not going to go too deep into investing in this video, but if you do want to learn more about money management and investing, we have a free ebook on it that you can read for free when you sign up for our financial education emails, which are also free. You can get our ebook and get our financial education emails by clicking the link up here or by clicking the link in the description below. By the way, our financial education emails are different from our financial news emails. If you don't want to invest in stocks, then you can look into investing in real estate, and real estate is actually my favorite place to invest my money. When you invest in real estate, you own a tangible asset, a property, and then you get passive income from rent from the property. The downfall with real estate is it takes a lot more physical work to get started because you can't just buy up a bunch of properties through a click of a button, and it costs more money to get started. But remember what we said before, recessions are times where investments go on sale. But if you're sitting there thinking that real estate prices are just going to suddenly get cut in half, you're going to be really disappointed. Real estate prices don't fluctuate as fast or as much as stock market prices because it takes a lot more time for a real estate transaction to be done, versus you can buy or sell a stock in a second. So while you can see the stock market drop 30% in just a couple weeks, it takes real estate generally a whole lot longer to come down in price. What we do know, practically speaking, is that if unemployment is high and the economy is slow, people are not going to want to go out and start buying their dream house. That means you'll have less buyers for real estate out there, and now if somebody owns a home and they want to sell it, well, now they're going to have to lower the selling price of their property to attract more buyers into their property because, well, if their price isn't low enough, then a buyer is going to go somewhere else because now there are more sellers than buyers. This is called a buyer's market because buyers have the advantage since there are more sellers than buyers in the market. For the better part of the last decade, we've been in more of a seller's market where there are a whole lot more buyers than sellers, and so sellers had the advantage because buyers would compete against each other to buy a home, and in order to compete, buyers would have to raise the amount of money they'd be willing to pay to buy a home. Obviously, there's a ton of uncertainty out there, but we need to pay attention to the amount of demand for real estate because if the demand starts to fall, you're going to see the price start to fall too, and I'll be keeping you updated on our YouTube channel, so if you haven't subscribed yet, make sure you do that. So now we talked about key number 1, spending less money, and key number 3, investing like crazy. But what about key number 2? Earning more money. I like to save key number 3, earning more money, for last because once you understand that you will get the most bang for your buck and the most value when you spend less money on extra guac and more money on buying Chipotle, That's when earning more money will give you the most power. Can I still get some extra guac though? Remember that financial system we talked about just a minute ago with the 50-30-20 plan and the 75-15-10 plan? Well, if you really want to explode your wealth game, you need to add some fuel to the fire, and in this case, it's adding more money into your funnel. You could try to work harder at your job, but when you're in a recession, it's not always that easy. But even if you're like most people and you're working in an industry that's being hurt by this economic slowdown, that doesn't mean that you can't make money outside of your job. This 2020 crisis has taught us a lot of things, but one thing that it has showed us financially is that the internet is the future. Traditional brick and mortar stores were hurt more than anything else because they had no way to operate, and it pushed everybody to do business and do things on their laptop and their phones. Lucky for you, you can start a business right off of the internet. If you don't believe me, just look at me. I mean, Minority Mindset is a completely digital financial news and financial education company. Plus, do you know what Airbnb, Hershey, Instagram, Uber, WhatsApp, and Disney all have in common? They all make a lot of money? No, I mean, yeah, but they were all founded during a recession. Every crisis comes with opportunity for the minority of people who think different. And so now, when we're faced with this economic slowdown, you can either sit there and complain about it, or you can do something to capitalize on it. It is more accessible now than ever, and you have so many free resources literally on your fingertips. And again, if you do want to learn more about money management and investing, we have a free ebook and emails in the description below. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about what you should buy during this 2020 crisis to build wealth, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.